What's up guys, Ben here and welcome to Motivation to Invest. Breaking news, a fast fashion growth stock has plummeted today by over 25% due to allegations of poor factory conditions at its textile factory in Leicester. Now if you watched a video I did on BooHoo stock a couple of months back, you know that I purchased a small stake in this company. Since then I doubled my money as the stock went up by over 100% in just 2 months. So with the bad sentiment in the air right now, has that changed the business fundamentals, or could now be a great time to add this stock to your portfolio? In this video, we're going to find out. I'm going to deep dive into the allegations and do a full stock analysis. Without further ado, let's dive in. Welcome back guys to Motivation to Invest. Before we get started, go ahead, smash that like button for the YouTube algorithm. That allows us to continue creating more great content like this for you guys. In addition, if you'd like more investment tips and exclusive stock picks, which I personally have invested into, then you should definitely subscribe to this channel. Be sure to turn the notification bell on. That way you'll get notified when a great stock is at a great price and I'm buying shares in it. So with that being said, let's get into the video. Right guys, so let's dive into these headlines and see exactly why BooHoo's stock has plummeted today by over 25%, causing £1 billion to be wiped off its market cap. While it turns out that the Sunday Times ran an undercover operation at a Leicester garment manufacturer, highlighting poor pay and conditions. The newspaper claimed that some of its clothes would be made by a factory which pays its staff as little as £3.50 per hour and was flouting social distancing rules. An undercover journalist recorded covert footage of himself packing clothes branded as Nasty Gal, one of BooHoo's brands, at a factory operating under the name Jaswell Fashions. So the question needs to be asked, is this directly connected to BooHoo? Well, BooHoo is the main buyer from this factory, Jaswell Fashions. However, BooHoo issued a statement distancing itself from the company, stating it is not a declared supplier and promised to urgently review our relationship with any suppliers who have subcontracted work to the manufacturer in question. Now, the fact that this is in Leicester adds another element to the saga. Leicester has actually had to go back into local lockdown where non-essential shops have been closed and residents have been advised to stay at home, as it has had an increase in the number of COVID cases compared to other parts of the UK. And you guessed it, these textile factories are actually being blamed for this due to their cramped conditions. So Leicester has over 1,000 textile manufacturers and is in the spotlight now due to these cramped conditions, which some say has caused another COVID outbreak. Now, whether this is true or not is yet to be seen. However, it still puts BooHoo in a bad light. Matt Earle, a managing partner at a UK hedge fund called Shadowfall, states the market appears to be reacting as though BooHoo's margins may have been boosted by suppliers and are much cheaper than they ordinarily would be without the potential breaches of modern day slavery. Labour Behind the Label, the labour rights group, last week published a report about evidence of BooHoo suppliers operating without social distancing measures inside factories, as well as instances of furloughed workers being told that they would not receive government support unless they showed up to work. Companies asking employees to work while on furlough will be in breach of government rules. So BooHoo is in a lot of bad light at the moment and in a sticky situation. But will this actually affect its fundamentals? Or is this just noise and we should extract the signal from this noise? Well, let's dive into the numbers. BooHoo, we're now on Stockopedia. BooHoo has got quality of 92, momentum of 97, value still says it's not great value. Its share price was down at £1.80 a share on the 3rd of April. It then shot up to over £4 a share and now it's plummeted down to £2.96 a share, which is the same price as prior to the crash, or very similar to prior to the crash. Now, this is obviously a large plummet here, but looking at the numbers of BooHoo, its revenue has been increasing at a compounded annual growth rate of over 54%. That is incredible, making this company a true fast grower. But that's not all. It's also extremely profitable, with 49.9% compound annual growth rate on its net profit, with earnings per share increasing massively. These are all vital numbers to look at when valuing a business, and these numbers are incredible. These operating revenues and the profits and the earnings per share, the increase is massive. The operating margin is not as high as I'd like it to be, and thus this margin could be affected by these recent issues. For example, if BooHoo has gone with a cheaper supplier, but they are flouting social distancing rules, then that could cause BooHoo's profit margin to actually decrease, which will affect its bottom line. However, that is all speculation at this stage. So as you can see here, revenue is forecasted to increase, net income is forecast to increase, earnings per share is forecast to increase. Looking at the analyst consensus, 2 sell, 5 hold, 5 buy, 9 strong buy. People here from Goldman Sachs, Morgan Stanley, Credit Suisse, HSBC. Current ratio 1.76, so that's how many times the business can pay off its short-term debts with its short-term cash. So you want to be looking for a company that's got around 2 in a current ratio, greater than 1.5 at least. 1.76 is good. It's not incredible, but it's good, and it's okay. It means it's got enough short-term cash to cover its debts. Return on capital 25.9%, which is fantastic, and return on equity 22.7%. As you can see here, its operating margin 7.36% is actually higher than the industry average. Now, this is what people are speculating now. Is it higher because it's hiring workers at £3.50 per hour? It's hard to say if that's just newspaper drama. Price to book value 15.3, P ratio 46.7. So it still has a high valuation despite the recent crash. Diving into its share price versus fair value, £2.82 a share is its fair value. It says here it's overvalued when in fact this software is not updated yet. In fact, looking at the share price today, right now, the share price is now £2.96. So it's currently at its fair value in terms of discounted cash flow. Now, as the great Warren Buffett says, it's better to buy a great company at a fair price than a fair company at a great price. Now, this is a fantastic company with some fantastic fundamentals, and it's now at a fair price due to the negative news. Now, as a contrarian investor, you want to look for these opportunities of negative news as potential times to invest. So create engagement through two-way social media contact, engage, value, brand. So basically what these guys do is they'll post, say, a picture of a couple of dresses onto their Instagram. They'll get people to vote on which one they prefer. And from that data, they then extract this to the designers, who then issue this to the factory and have these products on their online store within 2 weeks. Now, this is true fast fashion and truly listening to what the actual customer wants. Overall, BooHoo is a fast fashion growth stock with some great business fundamentals. Yes, the news about the factories does add some bad volatility into the stock. But you know what they say, when there's volatility, there's opportunity. So could this be a great time to buy the stock as a contrarian investor? So did I buy shares? Well, if you'd watched my video a couple months back, you know I purchased the stock back then. Since then, I doubled my money and I was up 100% on this particular stock. So I already knew it was a great company when this news broke out. So yes, I did buy more shares in BooHoo. In the short term, I expect this stock to be very volatile. However, its fundamentals are great. The price to earnings ratio is a little bit high. However, I believe it's a fair price for a great company. My plan is when the stock increases again, I will sell a portion of the stock and keep a portion in, so my entire investment is risk-free. But remember guys, this is not financial advice, so please assess your own investing goals, research the stock yourself, and don't invest any money which you can't afford to lose. So what are your thoughts on BooHoo stock, and are you buying shares right now? Let me know in the comments below and I'll join in the discussion. In addition, if you'd like a free stock worth up to £200 or $200, sign up to Trading 212 using my link below and you'll get that free share. I use Trading 212 for my stock investments as it's free, easy, and has a great list of stocks to invest in. In addition, if you found this video helpful, I would really appreciate if you give it a big thumbs up. And for more investing tips and exclusive stock picks, which I personally am investing into, be sure to subscribe to this channel and turn that notification bell on. And I'll see you guys in the next video. Invest safe.